All right. Well, welcome everyone. This is Scott Thompson, Senior Manager here at Schwab Coaching. Great to be here with you today. We have been doing our stock investing for beginners for the last 4 or 5 weeks now. And our original goal was to set up three different investing strategies. The first one was to invest in an ETF that tracks the S&P 500 or the NASDAQ 100. We've been doing that. I've been kind of simulating that myself in our paper money account. The other thing was to buy the top 10 holdings in those ETFs that track those particular indices. And then the third one, a few weeks ago, we introduced a plan called Two Green Arrows, which is really just a simple investing plan to help new investors get started if they want to be a little more active in the market and be able to follow some rules to their own investing. So what we're going to try to do today is go through all of our open positions. We've been kind of simulating about a $10,000 portfolio, investing up to 5% of the portfolio in any one position. And so, that will give us an opportunity to get 20 open positions, and that's what we've got. I've been doing these our daily routine ever since we started, and in placing orders to buy these different stocks in our paper money account. Not recommendations, of course, but just a way to show you how to do that. And today we're going to go through all of those positions is the goal. So before we get going, let me share my screen here and just go over some important information. Remind everyone our presentation today is for educational purposes only. Not a recommendation of any particular investment strategy or invest any equities here. We are using the paper money platform. There's some significant differences between the paper money and the real accounts. We are going to be talking about stop orders. Just remember, there's no guarantee of execution at the stop order price. It just triggers that order. And then remember that all investing involves risk. So let's jump in here together. Want to go over essentially our review open positions. And so we're going to jump right into our Thinkorswim platform. You can see here on the left side, we have a watch list of our different holdings. I've created that just for simplicity. There's actually a great feature on Thinkorswim. If you look right here, you can click on that and do a current account positions, and it'll create a watch list of all of your account holdings. So that's essentially what I've got right here. And these are the 20 open positions that we've had starting on the 9th of June is when we started this portfolio. And we've just been investing up to $500, which is, again, 5% of a $10,000 account. The position sizing rule that we've been using is to use $50 of risk per trade. And that's the difference between your entry price and where the stop price is. I've added this column here called sector, which is the sector to which the stock pertains. And I actually used this on the last purchase. There were about 5 or 6 stocks that gave a buy signal, and I chose a couple to kind of balance out a little bit more of where those positions were in different sectors. And so to add this column to your page, you can click on the little gear over here and then just look up sector. If you just start typing in sector, it'll give you that. You click on that, you can add it, and I just moved it up there right next to quantity. So this is our open portfolio now, and I want to go through and show you not only when we bought these and kind of the buy signal, but also talk about some nuances associated with this. But the goal again today is to go through all 20 of these open positions. If you have some questions, feel free to chat those in. Brett's there in the chat. Appreciate him taking some time there to answer your questions. And I'll go back through toward the end, and we'll have a little bit of a Q&A, answer some questions that have come up in the surveys, that have come up in some of the comments in the YouTube sections on the archived versions. And so let's just jump right in. I'm going to go over here to the charts. Earlier in our sessions, before I showed you how to set up the chart, I don't want to take time to do that today. I just literally want to go through each of these positions and talk about the entry. Now, you'll notice that the entry, all of these are going to have like a little green circle on the day that I purchased these positions in the paper money account. And so as we go through this, I want to talk through kind of the buy signal. I'm going to add in, you can see I have a vertical line here where my cursor is. Let me go up here to where my drawing tools are and just select that. Makes it a little easier to see. So again, we're just going to start right here at the top. So Abbott, the buy signal, again, remember the name of this plan is called 2 green arrows. And so what we're looking for is a green arrow on the moving average. And so just in your notes, put this down. If the stock price is above the moving average, then that arrow is green, and it's green until it turns red, okay? The MACD down here at the bottom is going to oscillate back and forth. The MACD is a momentum indicator, and it changes from red to green. The way that you get these arrows on your chart is just a real simple part of the study itself. When you go to the studies, in fact, if you go here to studies, edit studies, and you're on your simple moving average, if you click on this gear, right here it says show breakout signals, and just the default settings probably no. If you change that to yes, then that's when you'll see those green arrows. So it's not really a script. I'm not going to be sharing a script today, but this is just this is the chart. So I'm going to zoom backwards here a minute when that buy signal happened, because this one has an important nuance when you're looking at your buy signal. Now our buy signal is 2 green arrows, so the MACD went green on that day. The moving average or the price action was green way back on the 15th of May. And the buy signal is essentially 2 green arrows on when that moving average, the 50-period moving average, is rising. So in this case, it's pretty easy to see that was rising. But this one has a nuance in that we were trading sideways for a long time. And if the stock is trading sideways, then many investors will wait to buy when that stock breaks resistance, which is what I kind of demonstrated here, is we got in on this breakout. Okay, now put this in your notes. When a breakout happens, the very first thing that most technical traders will look for is for the stock to retest this breakout point, this old resistance, to become a new support area. That's what we hope happens. That doesn't always happen. So we bought the stock here. Dorothy had asked in the chat there, do we set the stop up at the same time that we buy it? Or do you have to do that? You don't have to do that, but I would recommend that you do that. Set up the stop, at the same time you purchase that order, partly because you don't know how many shares to purchase until you know where the stop order is. Okay, and the rules for this particular sample plan is to set the stop, 1% below that 50-period moving average. So we did that, and I don't remember how many shares. We got 3 shares, it looks like, and I bought that stock. Now this one, we go through the next day. It's what we call a spinning top candle. We'll talk more about the technical stuff in the future. The next day, this is not what you want to see. Okay. The stock not only did not hold the old resistance as the new support, it broke back below that. And it came all the way down, nearly touched the 50-period moving average. Now, one of the mistakes that I made when I first started investing was that this would kind of freak me out. I would be losing money on my position. I'd often bought too many shares. So I was very uncomfortable with the loss that I was seeing in my portfolio when a big day like this would happen. And I would generally panic, and then I would sell the stock. Okay. And I don't know what's going to happen in the future here, but if it keeps going down, I'll be happy that I'm out. But if it goes back up, I'll be sad that I don't own it anymore. But what I learned here, and again, put this in your notes because this is so important, is to position size your trades, every single one, as if it's going to be a loser. Okay, write that down. It's a very important psychological way to help you be a better trader and a better investor, is to just plan on this trade being a loser. And if that's the case, well, how many shares would I buy? Well, I'd only buy that which I'm comfortable losing, which we decided, when we started this, that we were going to risk about 0.5% of our $10,000 mock portfolio, which is about $50. Now, again, you may choose your own, risk amount, but ultimately you want that risk to be acceptable for you, because then it's a lot easier to just follow your rules. And now, what's the rule? Let's go back over here to the slides real quick, and this will be the last time I do this because I want to go through all these stocks. But what's the exit rule? Okay, initial stop is 1% below the 50-period moving average, and then we adjust the stop if and when we get 2 red arrows, meaning the stock closes below the moving average and the MACD turns red. Those are when we adjust it. And then there's another adjustment where if the stock keeps trending up after we buy it, we can start moving our stop up as we get new buy signals, which I'll show you on a few of those. Okay, but let's go here. Now we're on ABT. And as I go through these, one of the questions that you want to be asking yourself is, do I have anything to do today? Well, the answer is really easy. Is the stock above the moving average? The answer is yes. And that means what? That means that's a green arrow. Okay. So we don't have, a new buy signal, and we don't have two red arrows. So we're done with our analysis here. This only takes a few seconds. Okay. If I go forward a day, okay, do we have anything to do? Nope. Oh, wait, we got a red arrow on the MACD. Well, I have a green arrow on the price, a red arrow on the MACD. Do I have anything to do today? No, we're done. Okay. Next day. Oh, now I have a green arrow here. So technically that's a new buy signal, right? Green arrows on the MACD. Now, if I hadn't already bought this, I would look at this and say to myself, well, the stock's kind of trading sideways. I don't think I really want to buy this unless it breaks that resistance. Now, again, this is a little nuance based on the plan. Almost all stocks will go through a period of consolidation like this. And so many investors will wait until it breaks that resistance before they get in. Now, another note to put in your in your notes today, or another thing to write down, is we don't adjust the stop usually until the trend starts back up. So if we get into a stock that gives like two red arrows, like over here, I wouldn't have moved my stop. I would have just left the original stop in place until the trend starts up. Okay, so there's quite a few little nuances that I've already shared with you about this investing plan. Waiting for a break of resistance. Don't adjust the stop until you actually start seeing the trend up. Let the original stop do its job, which is get you out of the trade when and if the trend breaks and it hits that stop. Again, no guarantee that the stop orders are going to fill right at that price. That's just going to trigger the order, and then we might get filled significantly lower than that. All right. But next day, the stock's back up, back down. This is where we are today. And the question would be, do we have anything to do today? Well, the answer is no. We have a green arrow up here. We have a red arrow on the MACD, and we're done with our analysis. Okay. But we did buy it. I think one of the things as you look through your own investments and your own trading is, was this a valid entry point? Did we do a good job on the entry? Even though it's losing money, I think this was a valid entry, and that's okay. Guess what? We're going to have some trades that lose money. All right. All right. So a couple questions that have come through. How do you buy dollar versus buy a share? You can go on the trade page there, Jose, and you can switch up your order. On that is to go and click on the order, and you can change it right here. This is where you click, and it'll change it to a percentage or dollar amount or shares. All right, so that's that one. Now let's take a look at the other positions. We're already kind of spent a lot of time on that one, so we're not going to spend as much time on this one here. And I'll come back around and get the questions. But let me go through our open positions and just talk about them, show you the day we bought them. There's one that I have to move the stop up on that I wanted to share with you today. So AMD is our next position. Okay, we bought it here on the MACD turning green. This was back on the 16th. All right, we have a red arrow on the MACD right now, but the stock's above that. We don't have anything to do today. Okay, we're done. Next one. BAC. Okay, BAC was kind of similar. We had that little sideways consolidation. The green arrow actually happened the same day that I think we broke that resistance here on the 23rd. We got in there on that one. The stock's been going up nicely. So Citigroup, we got this one on the 24th here, and it's been going up nicely. Now COP, or let's see, COF, again, kind of sideways here. We got a green arrow actually on this day, the 23rd. But if you see that right here, the 23rd was this day, and I would not consider that a valid entry point. Now, why? Because the stock was trading kind of sideways, and so we would wait for that to break resistance, and that happened on that day, and we got in toward the end of the day, and then the stock's gone up nicely since then. Okay. Now we don't have a new buy signal, and we don't have two red arrows, so we don't have to adjust our stop yet. Now, one of the common questions that comes up is, could we adjust our stop? Sure, but that's just extra work, and I'll either wait for a new green arrow for the buy signal, or I'll wait for the red arrows. Okay, so it doesn't have to be adjusted. I know when I first started investing, that was one of the things I was anxious to move my stop up. So I don't have a problem with that, but just remember the rule is to put and keep the stop below the moving average. assuming the moving average is our trend indicator. And as long as the price stays above that, we're going to say that intermediate to longer term trend is bullish or upward. Okay, so there's looking at COF. COP was kind of interesting. You know, we had the stock trading a little bit sideways. I waited until the moving average ticked up. And so we bought this right here. And then the stock just fell. And right there on the 24th, we actually got 2 red arrows. Okay, now in this particular case, because my initial stop was set 1% below the moving average here, the low price of that candle was actually a little bit below the moving average, and we didn't get stopped out. It came really close, but the point is here is I wouldn't be adjusting the stop on that particular day because I don't want to lower my stop. I've already position sized my trade based on getting stopped out around this price at 88.24, and I don't want to lower that stop and essentially take on more risk. That makes it so it doesn't meet the rules anymore. Now, in this particular case, the stock bounced around. We got essentially a new 2 green arrow right here. And I think someone could have bought that again. It kind of closed above these resistance areas, set the stop 1% below the moving average. But this brings up another nuance that I wanted to share with you today was, you know, the rules are the rules, okay? You know, we want to try to buy when we get 2 green arrows, when the stock's above a rising 50-period moving average. But sometimes, and this will be the case with COP, sometimes the support or the last lows are below the moving average. So this is a little nuance again. Anytime that I see essentially a buy signal on a stock and my rule says 1% below the 50-period moving average, but I see some support that's below that, I would probably go ahead and set my stop below those recent lows rather than just 1% below that. I don't want to get picked off in this range of where the support is. So I'll set my stop 1 to 3% below there. And that's something that you'll have to decide for your own rules is where you want to set that stop. But generally what we do is we try to set it below support. The whole point of a stop order is to get you out of the position if and when the trend changes. And so, trend definition is lower lows and lower highs. So when and if this makes a lower low, that's generally when we don't want to be in this position anymore, okay? So that's taking a look at COP. As of right this second, we don't have anything to do. We're still in the position. We're losing a little bit of money. You can see the purchase area was up over here about 95. All right, let's take a look. Now, the rest of these, I'm going to fly through pretty quickly. I do want to just talk a few things. Here's Cisco. Cisco, again, you can see the purchase price on that little green circle we got in there. This is the 23rd on 2 green arrows. We have a red arrow on the MACD today, but guess what? Nothing to do. Okay, unless it goes below the moving average, we don't have anything to do. Okay, Disney. Now, Disney's kind of cool because Disney, I got in a couple days after the green arrow on the MACD. I set my initial stop below the moving average. And then when's the next stop adjustment? You guys remember? Okay, next stop adjustment, next 2 green arrows, all right? So if we get 2 green arrows again, then we can adjust our stop. When did that happen? Well, right here, okay? So right here on the 30th, we got a new buy signal, and so we moved our stop up to 1% below the moving average. So now our stop's up there at 106.81, and the original stop was 99.17. So as the stock continues to trend, we're moving that stop up to essentially reduce our risk in the trade at some point. Usually for these intermediate trading strategies, it takes about 2 months. If the trend continues for 2 months, then eventually our stop will be above our purchase price, okay, which is kind of a cool thing to have. Now, EMR is kind of interesting because, here we are, we got in on this day. We had some red and green arrows here, but essentially we got a new green arrow buy signal right here on the 26th. And so I didn't move my stop up then, but I do want to move it up now. So let me show you how to do that. So here, if we put our cursor on that particular day, we could use today, but I'm just going to use the buy signal day. If I hadn't bought the stock already, this is a new buy signal based on our sample plans. Again, not a recommendation. But we could say, well, the moving average, where is it? If you look right up here, it says simple moving average. Right over to the right, there's a number. Right now it's 117.98, but on that particular day, the moving average was at 116.63. So again, the rule is to put the stop 1% below that moving average. So I'm going to go over here. We had, what's the value? 116.63. So 116.663 times 0.99. That's how you get your stop order. So 115.46 is my stop. Now check this out. This is really cool. Because I have my order showing here, I can actually left click on this and move it up. And you see the number changing, 114, 115, 46. Oh, that's perfect. Okay, so just by grabbing that and moving the line up, I can adjust my stop right here on the chart, which I think is one of the coolest things here in Thinkorswim. And so I just double check, 115.46, 115.46, and then I hit send, and that's going to give me now a new stop at this price, which is kind of cool. Okay, so that's taking a look at EMR. Again, I see some questions flying through. Let me get through the rest of these positions, then I'll spend the rest of the time answering the questions. Okay, 3M. Okay, 3M. Now this one's interesting too, because this one, the stock was trading, you know, in a downward movement. This one I drew a little diagonal resistance line. The moving average is rising, or was rising when I got in there. The buy signal on the MACD happened this particular day. I think you could have bought it there. I just didn't do it. I didn't see it till the next day, and so I got in on this day here. Now, this is one of those where the rule says to put the stop 1% below the moving average, but you see this last low right in there, right about 141.57, and so I went ahead and set that stop below the low rather than below the moving average. Again, a little nuance when we're dealing with support and resistance levels, because you know, the question is would I want to be stopped out of this if it traded below the moving average by 1%, but did not go below the support? And the answer to that's no. I don't really want to get knocked out of the trade if it's trading above this last low. Okay. Now, as this develops over time, if this gives us a new green arrow buy signal, then we'll move the stop up. But as of right now, I have that stop below the moving average. Okay. Next one is MS. Okay. MS we bought here on the green arrows. It's been trending up nicely. We don't have anything to do today, okay? NVIDIA. Now, NVIDIA is part of the top 10 of the S&P 500 and the NASDAQ, so I didn't mean to buy this one, but I've been kind of avoiding the top 10s because we have another plan that's doing the investing in those particular positions. But I did buy it here on this little green arrow buy signal day on NVIDIA, and we set the stop 1% below the moving average, okay? Pfizer. Pfizer was trading a little bit sideways, had some old high over here. The moving average was rising, and I could have bought it on this day. I didn't see it till the end of the day, so I put an order to buy it the next day, and we got in here on the 2nd of July. So this is one of the more recent ones. Stop again is 1% below the moving average, and we have green arrows on our MACD and the moving average. So again, there's nothing to do. You know, one of the things that was really interesting to me when I first started investing is like, well, how do you have the time to go through all this? Well, when you know what exactly you're looking for, it doesn't take very long. You're just, do I have 2 red arrows? Answer is no. We're done with our analysis. Don't make it any harder than that. Okay. All right. Next one. SPG. SPG again is one of those that had that diagonal resistance. It broke above that here, and I went ahead and bought it. Now I was going to hope it just took off, but it kind of fell back the next day. This is another one that has that nuance, had support below the moving average, so I put my stop below the support rather than 1% below the moving average. We got 2 red arrows here. Again, I wouldn't be adjusting my stop lower than that original stop, so if it kept falling, we would have been stopped out and had a loss. The next couple of days, it actually went back above the moving average over here on the 26th, and now we've had a little bit of a run, and we're up about $6 a share, which is kind of cool. Okay, so that's SPG. AT&T we bought on, you know, consolidation, broke out, huge breakout move on the buy signal day here. Put an order in that night for the next day, got filled. Again, this one's actually doing what we would hope it does. It comes back and kind of tests that area of old resistance is becoming new support. Now, I don't know if that's going to hold or not, but hopefully it does, and hopefully it just keeps trending up. But if it doesn't, we're going to get stopped out with a loss. All right, Target. So Target, again, kind of similar, trading sideways. You know, we had a green arrow back on the MACD over here, but again, I don't really want to buy, even though technically it meets the rules. The moving average is rising, green arrow, green arrow. Why not? Well, because it's been trading sideways, I want to wait for it to break resistance before we get in there and act on that, there's your break of resistance, close above resistance, put the order in the next day, and now we're losing money on it. But again, we're going to expect this to come back and test this area. Hopefully it holds at 177 and then goes back up. But if it doesn't, we'll get stopped out and lose some money. Welcome to the market. That's just how trading works. All right, TXN. Okay, TXN we bought here on this buy signal day. The MACD went green on the 25th. We got in there on the 26th. It's been trending up nicely since then. Stop 1% below the moving average. USB, again, little consolidation. What do we wait for? Wait for the break of resistance. It got broken that particular day, so that's a day after the MACD turned green. And we got in there on the 26th, up nicely since our entry. WFC, again, very similar. Sideways motion, buy signal technically this day, which some people would wait, again, for it to maybe clear some of these highs, which is kind of what I did. I got in there on the 20, on the 24th there, been trending up nicely since our purchase. Now, Walmart, honestly, I don't remember why I bought this one. I think at the time, this is one of the ones I bought here on the 23rd. There's the buy signal day right there. Now, kind of based on everything that we've talked about, I probably should have waited on this one until we broke resistance above 100. Because I just don't know if this is going to trade sideways. And now that we've kind of got 20 open positions, I can't really buy anymore. I don't have any more money for this particular allocation portfolio to purchase anymore. So, I don't really want to be in a stock that's just going to trend sideways. Now, we'll talk more about this in future episodes when we talk about, like, how do we pick good stocks? What do investors look at to determine whether or not they want to trade something over something else? If I've got 6 buy signals, how do I choose which one I'm going to buy? And I didn't do a lot of that here at the beginning. I just wanted to show how to act on a technical buy signal. And then as we go forward, we'll look at, some different fundamental criteria that people look at to help determine whether, hey, Walmart's better than XYZ or ZYX company or whatever it is. Okay. But Walmart, we bought on that day. Did it technically meet our rules? Yeah. Moving average was rising. We got a green arrow. In hindsight, I would have waited till this broke out, but I didn't. Here's that little nuance again. Support was below the moving average, so I wanted to put my stop down here below support. And this really hasn't done much since we got in. Gave a red arrow here, but the MACD was still green arrow again, and trading kind of choppy and sideways. Okay, so we have done what I wanted to do here is I wanted to go through and show you the different positions that we have in our portfolio. Let's go back to the monitor tab, and you can kind of see that Abbott's losing money from our entry date, top, COP's losing money, AT&T and Target are down a little bit. But net overall, the little mock portfolio that we started back on the 9th of June, or actually more like the 23rd of June, is, the stocks are trending up mostly. Today, everything's losing money. The market's down. So guess what? Our portfolio's down. All right, now let's go back and take a look here at the questions. And I saw a bunch of them. So let me, give me a second to go back through and just take a look at this here. So, Dorothy had asked, does the original stop have to be placed at the time of purchase? It does not have to be placed there. But I think it's important when you're doing your position sizing in order to determine your risk per share, which is the difference between your entry price and where that stop price is. You have to calculate the stop. So do you have to set the order up that way? No, but I think you need to know where your stop's going to be in order to get the right position sizing so that you can risk the right amount of money so that you can trade well, okay? One of the things that I've learned over 20 years of doing this, talking to thousands of people, is that if they're uncomfortable with their risk, they won't follow whatever plan they have. Okay, one of my favorite little mantras is plan your trade and then trade your plan. Okay, all right. So let's see, a couple other questions that have come out. What was special about the green arrows? Ariana asked. It's just a breakout signal. I showed that on the chart. These green arrows. Let's go take a look at something that's been trending up nicely. Is it AT&T? No. Which one's MS is gone. So, the green arrow, this is what we call a breakout signal. You can set that up on your chart, and it just lets us know, visually, the plan is called 2 green arrows. So it's just using the indicators to help us know when the momentum is essentially in our favor And we hope, we don't know, but we hope the trend continues. And if it does, generally the stock will continue to go up, and hopefully we're making money on the trade. Okay, that's that one. Let's see, another question that came in. How do you buy? We talked about that. How do you buy a dollar versus the shares? I showed you how to do that. Vic says, can you share the green and red arrow script, please? Well, again, it's not really a script for this chart. I can share, where is it? I think it's in style. Oh, there it is, share chart. Okay, so there's the chart, share, and I can share that, but it's not really a script. It's just, you can set up the chart yourself, and it's pretty easy to do, okay? Elena says, if you want to lock in more profit and have held the stock for a while, could you use a 30-period moving average instead of the 50, or would that be selling too soon? It's funny. Some of you may remember different traders. There's so many things on YouTube anymore that, you can do anything you want to do, okay? Everything that we do has a consequence, a pro and a con to it. If we move our use a 30-period moving average instead of 50, then you're going to get those exit signals a little bit sooner. The objective, which we talked about a few weeks ago with this particular plan, is to buy stocks in the S&P 100 when they're uptrending and hold them until that trend is over. And we just determined to use the 50-period moving average. It's a little bit slower than the 30-period moving average is going to be for sure. But it's up to you. You can create your own rules there, but and your question was, is that going to get out too soon? And not necessarily. If the stock falls through the 30 and then keeps going down through the 50, then it'll get you out, earlier than if the trend changes, right? So the challenge is if the trend doesn't change and you want to stay in that trend, then you might get a signal on one of those shorter term moving averages that gets you out of the trend, maybe before that, what we would consider maybe intermediate to long-term trend is over, okay? So it's a good question, Elena. But again, we're just creating a rule set. Now, what I would recommend that you guys do, and you can use this one as your example, but whatever rules you come up with, you want to paper trade those, just like we're doing here in our paper money account, probably 20 or 30 times to get some experience. And as you go through the exercise of trying to follow the rules exactly like you have them outlined, then you'll start to develop your own knowledge and own experience, like, oh, I would have liked to have gotten in a little sooner, or I would have liked to stayed in a little longer, okay? But, whatever rule set you create, I recommend that you just follow that for your own, okay? Let's see. Dorothy says, how do you know where to set the resistance line? Now, this is a great question. I have a few more minutes here, so I'll go through an exercise just with you here, and I'll show you how I like to draw resistance lines. This is not the only way. So very first thing, Dorothy, in your notes, put in resistance is an area. Okay, what is it? Resistance is an area. It's not a specific price. Now, that being said, well, how do we define that area? I'll show you how I like to do it, okay? I like to go in and pick a high, an intraday high on a previous high when the stock starts to consolidate. So like here on MS, we see between like the 15th of May and about the 23rd of June, the stock was trading a little bit sideways. It was making higher lows, but it was really kind of having trouble buying, getting above some of these highs. So let me show you how I like to do it. So I take my drawing tool here, and I like to left click, to the left of where I think the high is. Okay, and what I like to do is just identify the high. That one's at 133.03. This one's at 132.98. So which one's higher? Well, that's the high one right there. And I like to click my line on there. Now, some of you may have seen that line jump. Did you guys see that? I'll show you again just so you can kind of see it. But if I have my line up here, as I move my cursor over the top, look at that jump. Do you see it jump there? It jumps down to that. Now, how does that work? Let me show you. This is like one of my favorite things. okay, on your, when you draw your line, or go up here to your chart settings, this little gear, and you can come over here, snap drawings to, your default setting is none, and when you have this set, it'll just draw the line right where you have it. But I like to set mine to open, high, low, close, and that way the line lands exactly on the top of that candle. You'll notice the high there is 133.03, and you can't really see it very well, but this number says 133.03. Now the next question that comes up is, well, how do I get that number on my lines? Do a right click on your line after you've drawn it, click Edit Properties, excuse me, and then see where it says Show Price. You can show the price on the left or on the right, and usually because I have room to the right of my chart, I like to show it on the right. So I'm going to say on the right, and then come down here and click Save as Default, and that way every line you draw in the future will have that number on it, okay? So that's kind of cool. So that's how I start my resistance line, Dorothy, answering your question. How do you draw those resistance line? I like to find somewhere in the past where there was obviously a high and the stock came down. Now, as the stock moves around, okay, and I'm going to zoom out or go out a few days here. So where's the area of resistance? Well, as it starts to trade near that old resistance area, like right here, we have a few times where the stock's kind of pushed its head above that area, okay? And so let's again assume that we're back here a few days. We don't know what's going to happen in the future, but now I'm trying to decide where this area of resistance is. Now, some traders will look at the closing prices here. So they might say, well, kind of the low end of this range is in this area, okay? And then what I also like to do is take a look at the highs that have pushed up above that original point, and I'll draw my line like at the extreme high there. So now I have a range between about 132 and 133.57, and for fun, I'll just get rid of this line. But this is kind of that resistance area, okay? And so some people would say, well, if it closes above the 132.08, as a more aggressive trader, they might enter the trade when that happens. Some a little bit more conservative technical traders might look for a close above 133.57 before they bought that. So as we're moving forward, you know, we can start to see the stock trade in that range. You know, right there, technically, we got to close above the higher end of that range this day. But based on our rules, the MACD is still red, so we don't have a buy signal there. And then there's the green arrow buy signal, and that's what I did is I bought it on that particular day. So hopefully that was helpful for you. This is a really good way, or great question about how to draw those resistance lines in there is, you know, and I just think, you know, very first, resistance is an area, but I like people to be consistent in how they draw those lines. Some people just eyeball it and they'll just draw a line kind of through the area. Like I said, I like to pick some of these highs and lows and closing areas in there and just kind of define that range that way. Okay, so there's that one. Let's see here. Couple other questions as I go through. Is there a green arrow only for the MACD? I think we've talked about that. Sam says, do you ever look at volume? I read that we should buy on high volume breakouts. So to answer the question on this particular set of rules, you know, we are not looking at volume per se, but let me tell you why I don't have a volume thing on my chart. What stocks are we trading? Now, we didn't go through that today, but the stocks we're trading are the S&P 100. This is the top 100 companies in the S&P 500 index. And so all of these are fairly actively traded. One of the reasons that we like to see volume, a high volume on a breakout, is because we feel like, okay, if the volume's really high on a breakout, then institutional investors are trading those and helping push that stock through resistance. And by getting a high volume breakout, we can actually, you know, maybe have a little more confidence in that. But the reason that I'm not so concerned in this particular plan about volume is because of the stocks that we're trading being in the S&P 500. I already know that these are very, very attractive stocks to investor or institutions, that they have percentage holdings in all of these companies. And so, you know, if it does break out, I know that I'm not the only one there. Now, could you include a volume rule for yourself? Sure. In fact, a lot of people like to have if I'm going to buy on the 2 green arrows and it breaks resistance, I like to see maybe 150% of average. So if it's 1 million shares average, then they might want to see 1.5 million on that breakout or something like that. Okay, so it's a good question, but the reason we don't worry too much about it is because of what we're trading here. All right, now I'm just about out of time here. I see that Brett has answered a lot of these questions. I'll come back around. I like to go through the chats myself, and then I'll take a look at the questions that we haven't answered, and I'll actually post those in the comment section of the recording. So if you didn't get your question answered today, then just go back and watch this recording. Should be available later today. If you haven't subscribed to our channel, really appreciate it if you would. I don't think there was a survey today that I see. So, if you have some comments or if you're watching the recording, please post those questions and comments in the YouTube section, and I'll answer those. I look at those pretty much daily. So hopefully this was helpful for you today, everyone. And go through, determine your own investing plan, your own investing rules, and, practice. Practice makes perfect. And so it's a pleasure being with you here today. Thanks, Brett, for all you're doing. Follow us on YouTube and also on Twitter or x.com. Thanks, everybody. We'll see you.